Stocks keep floating near all-time highs, but the deeper you get into it and just look at it, the more things just feel off. We had CPI data come out today and inflation ticked up higher. We got more tariff news rolling out and the Fed's leadership might be about to change, all while tech keeps carrying the weight of this rally. So today we're going to get into what actually matters this week and what could possibly shake things up from beneath the surface. So looking at a couple charts, we can see a big old pop in Nvidia stock today, and we'll get into reasons why today this happened. But I'm sure that's what contributed to the Magnificent 7 ETF ending out the day in the green and the NASDAQ 100 being positive, because both the S&P 500 and the Dow Jones Industrial Average were down on the day. Bitcoin up on the day, but it's slightly down from its $123,000 new all-time high it just hit. The DXY, which measures the US dollar compared to a basket of other currencies around the world, is also up today. So that's quite interesting. So stocks are up depending on who you're looking at, but that rally's got no legs underneath it, and you'll see why. Market breadth is terrible. Only tech is rising, so literally only one sector is green while the rest are red. That setup hasn't happened since 2015. Every other sector, materials, healthcare, financials, utilities, they're all down. And it's really just a few mega cap AI names holding things up, and maybe Nvidia. And when you zoom out, it looks more like 3 different markets this year, and it's been completely volatile. So what they go in on this one this year has been a tale of 3 markets, how to play each. They go on to talk about this post-election rally that we got pretty much through December through January, and it was built on optimism around deregulation and Trump's business first agenda. And then we got through to February through April, where there was this tariff drag, and it caused markets to dip nearly 8% from tariff risk and wild policy moves. That Liberation Day fell within this timeline. And then we got the AI rebound, where this was May onward, so onto current now, with nearly a 12% return from mostly this AI boom and the idea that AI is going to bail us out and shield us from this macro risk that we see from this wild tariff on and off and high and low and then high again. It's been a complete mess. But here's the thing, if the taco trade starts breaking down, that Trump always chickens out, all of that hope can flip, and it can flip fast. Now, let's get into CPI and what really happened with this. So CPI came in, and the headline year-over-year number came in at 2.7%, which was up 2.4%. So what's that tell us? Inflation increased a little bit. So inflation is the rate at which prices increase. Core year-over-year, which stricts out volatile segments like food and energy costs, which it's weird that people focus on core because food and energy are like what people spend their money on. But core year-over-year came in at 2.9%, which was a match to expectations, up from 2.8%. And I don't know that I mentioned, but this CPI data read that we got today measured June's numbers. So these were all from June. And this was the biggest monthly increase we've seen this year. Gasoline and shelter drove most of the increase we've seen, so the usual sticky categories are still sticky. Tariffs aren't fully baked into the cake yet, so they're not showing up in the numbers yet, but we're starting to see early signs of it. BlackRock's guy, Ricky, I don't know how to say his last name, noted that companies are holding the line so far, so they're absorbing the cost increase, or at least using tech and their supply chain workarounds to kind of stall it out a little bit. But if tariffs keep expanding, pricing pressure is inevitable, and especially if firms can't keep eating these costs, and it could get down to margins. So the bottom line here is that this inflation print doesn't help the case for a July cut, and the Fed's watching core closely. They're watching it closely. So let's see what CME Fed Watch Tools baking in for July's cut. All right. Once we load, and I promise you can load, 97% chance we're just going to keep rates the exact same. What about September's meeting? Oh, wow. So this was just as high as 70 like a week or two ago. And then yesterday, on yesterday's video, we looked at it, and then it was at like 60%. So this caused quite the drop as far as the market's expectations of a Fed cut. Wow. All from just an inflationary read that we were getting at. But the news doesn't stop there. So Trump's on a full-blown tariff campaign yet again. So we got more news as far as another player's tariff rate. So there will be a 19% tariff rate on Indonesia. Trump said they'll pay 19%. The U.S. will pay nothing. And they think it's a great deal. They're happy to do it, is what he said. And the European Union is bracing for more tariffs, especially on autos. Trump also warned Russia and partners they'd face this 100% tariff rate unless they back off from Ukraine and all of the hostilities and violence going on there. But at the same time, he's signaling more openness with China, which could possibly be good news. And this is where Nvidia comes in, because what we've seen with Trump is that Trump pulled back on the AI chip restrictions for Nvidia selling to China. So Nvidia has these H20 chips, and they're able to sell them to China again after a face-to-face with both Trump and Beijing officials by Nvidia's CEO. And then Treasury Secretary Scott Bessent called it a part of the negotiation tactics for China. So this could lead into the tariff talks and how things are going. And these are major signals because Trump is using tariffs as a leverage while appearing open to deals, and it's creating major uncertainty for global trade. So we'll keep on watching this one. Now, we might be looking at a new Fed chair pretty soon because Scott Bessent, the Treasury Secretary, was talking on Bloomberg, and what he says is the formal process to replace Powell is now underway. Trump hasn't said he'd fire Jerome Powell. He's been calling him too late and like criticizing the guy pretty much every day, and like the name too late is just wild to even call somebody, and just refer to them openly all the time about it. He's written the guy letters and so on, and says that the rate should be 300 points lower than where they're at. But if it's clear that he wants someone else in charge, and Bessent noted it's confusing to markets when a former Fed chair stays on as governor after being replaced, because usually after a Fed chair's term is up, they'll serve as governor. Signaling Powell may be pushed all out of the way completely. Jamie Dimon warned that he came in to weigh in, and he defended the Fed's independence and said politicizing the Fed is dangerous. And all of this adds another layer of uncertainty for the markets to try to price in or try to figure out what's going on. And honestly, nobody has a clue, especially heading into an election year for the Federal Reserve Bank at least, because Federal Reserve Chair Jerome Powell's term is up next year, I believe in like May or something. So the news doesn't stop there either. We had big banks reports. So we had JP Morgan, we had Wells Fargo, Citibank, State Street. And pretty much all that we got from there is that, and a lot of people were watching this to gauge what was going on, their results suggest the economy is resilient, which is crazy because who's just feeling like, oh man, this is the best economy ever, I feel so rich. But they say that consumers are staying on top of their debts. Loan demand from households and businesses is actually picking up. Management teams seem less nervous than they were just a few months ago. And Jamie Dimon said himself that we've basically been in this soft landing scenario for a while. So even if inflation pressure and political chaos, the economy is still chugging along, which is honestly crazy. So tech's flying, stocks are in highs, and earnings are mostly good, but there's a lot of shifting happening underneath the surface. Tariff risk is back, and I bet it's back to stay, assuming it doesn't get blocked by the courts or something. And even then, I'd imagine it doesn't stop there. We got inflation picking up, going further away from the Fed's target. But remember, the Fed watches PCE. CPI just kind of plays into the Fed's preferred measure of inflation, which is PCE. But who knows? This could be a one-time increase like a lot of people are saying, and it might not be sticky after all. So inflation's picking up, and the Fed's leadership could change any day now, and this shadow Fed could be announced, and then they're going to be talking about how they're going to cut rates, and we're going to cut rates like we never cut before. This is the best country ever. But if you're paying attention, things are getting more complicated day by day, and all we can do is stay sharp out here and keep on learning. So I invite you back to hang out with me tomorrow. We'll figure out what's going on day by day and continue learning together, everybody. Hope your day is great, and I'll see ya.